Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to start off by taking a look at the Euro versus US dollar, the granddaddy of all the major currency pairs. Today's date is August 9, 2023. The clock just ticked past 5 p.m. in the eastern United States. That changes the date from the 8th to the 9th. And from a technical perspective and from, just an overall foreign exchange perspective. And so let's take a review of yesterday. We saw the Euro versus US dollar initially open up just above the 200-hour moving average yesterday, then move below it in the Asian Pacific session, only to find buyers that push the price back above the 200-hour moving average, the green line, and is charted into the early European hours, and that high price that we saw in the day yesterday came in right near the highs from the previous day, near the 110.10 level. Market so I was leaned against this little ceiling right here and forced the market back to the downside when the price fell back below the 200-hour moving average. You can see that it stayed below that moving average line for the rest of the trading day. We also moved below the 100-hour moving average, the blue line, and it stayed below the blue line at 1.09678. But we moved down to this other blue line, which represents the 100-day moving average. It's a step line here, the overlay on the hourly chart. And for the third time, I guess, in the last 1, 2, 3, 4 trading days, the market came, actually 5 trading days, it was the fifth time the market came down toward that 100-day moving average. And apart from these little breaks here and here, we pretty much found support buyers against that 100-day moving average on each of the times, and it was no exception in trading yesterday, and the price has since rotated back to the upside. So technically, going into the new trading day, what do we have? Well, we have the 100-hour moving average above, which is going to be our first level of resistance up here that we would need to get to and through if the buyers are to take control. If they're able to do that, then we look toward getting above the 200-hour moving average again. Now, admittedly, over the last 1, 2, 3 trading days, the price has gone above both of those moving average lines, but it hasn't been able to sustain the momentum. When we have the 110.10 level up here, that would be another target on the top side we need to get to and through if the buyers are to take more control and work its way toward the 38.2% retracement. It seems like a far way away, but it really isn't that much. But if the price is going to go higher in the euro versus US dollar, we need to get above the 38.2% retracement if this trend moves to the downside. If it can't, then the buyers are not winning. Okay, so all these levels from the 200-hour moving average, the 110.10 level, the 38.2% retracement are all targets that would need to be broken in order to improve the bullish bias. Absent that, guess what? The sellers are more in control. On the downside, what do we have? Well, we have this swing area through here. And if you go back in time here and look at the go back even to these days right here, this is the area that I was referring to. You can see that we have a swing high, or we formed this ceiling through here, where we had a number of different swing highs that we broke through the ceiling, used that level as a floor through here, and used it as a floor here until we then more recently came down and traded above and below it through here, but based against it on trading on Friday before moving to the upside and trading here today. We did break below it only briefly on its way to the 100-day moving average. That's the blue line right here, and this swing area and the 100-day moving average at 1.09255 remain key levels to get to and through. Last 1, 2, 3, 4, 5 days, the market has not been able to get below that 100-day moving average, and we need to get below that level in order to push the price further to the downside. The low price that we saw in trading last week came at 1.09115, and that will also need to be broken on the downside to get the ball rolling in that direction. Let's take a look at the daily chart. And if you look back, you see this 100-day moving average. Not only did it hold support in the month of August here on a couple different occasions, we also held it here in the month of June once the price moved above it, and we also held it here in the month of July. So there is a pattern developing against the 100-day moving average that we need to get to and through it and stay below that level in order to increase the bearish bias. So be aware of that level. That's what's going to be key in the euro versus US dollar. So 100-hour moving average above, 100-day moving average below. Those are the levels in trading today. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.